Hi, Noah Kelch here. Wanted to talk today about how much money you should try. Let me take that back. How much how much is an ideal amount to put in whole life insurance in a properly structured whole life insurance policy? So first of all, I did another video already about maxing out your insurability or your human life value, something that's called human life value, which is the amount of insurance that you're entitled to. And again, just real quick, I do recommend that you max out your human life value, get as much insurance on your life as you possibly can, and not just your life, but your spouse and your kids and parents and everybody, right? That's it goes without saying, but I just said it anyway. Anyway, so right now we're going to talk about what's an ideal amount to put into a life insurance policy. And so there's lots of different ways to structure a life insurance policy, and I'm talking specifically about whole life right now. There's lots of different ways you can structure it. Think of a teeter-totter or a seesaw, where you can, like the heaviest weight makes the other side of the teeter-totter or seesaw go up, and vice versa. If you put more weight on this side, then this side is going to go up. So think of a life insurance policy as a teeter-totter or a seesaw, and so when you structure a policy with a heavy emphasis on the death benefit, so the heavy emphasis on the death benefit, the equity or cash value of a life insurance policy is going to be light. On the flip side of that, we can also structure a policy to where the they're weighted equally. Let's say we put an equally weighted emphasis on both the cash value or equity of a life insurance policy and the death benefit. And then you're going to be about balance. But you also have the ability to put a heavy emphasis on the equity, the cash value growth, which makes the death benefit light, at least to begin with. This is the type of policies that I specialize. I mean, that's one of my wheelhouse tools, among other financial vehicles, annuities, and long-term care and disability. Uh, but we're talking about whole life for a moment, or in this conversation. So we can put the heavy emphasis on the cash value and the cash value growth of that policy. And when you do that, it makes the death benefit light. Now, the purpose of a policy like that is so that you can use that cash value as a personal banking system throughout your lifetime. When they're structured that way, the cash value is immediate, like today. It also grows very, very rapidly inside this policy. When they're structured this way, the death benefit over time, it'll get heavier and heavier and heavier. Okay. Now, I'm not saying that you're going to have a small death benefit. When we structure these policies this way, it doesn't mean the death benefit is small. It's just smaller than if you were to put all of that premium with the emphasis on the death benefit. So just imagine that it for me, if you will, cash value heavy, death benefit light to begin with. But the death benefit continues to grow over the course of your lifetime, and it grows very, very quickly. Uh, Obviously, the more you put into it, the faster the cash value is going to grow, the faster the death benefit will grow, so on and so forth. So a lot of times, a lot of clients will structure their whole life policy with a heavy emphasis on the cash value, less emphasis on the death benefit. And that's the policy that they're going to use as this personal banking system. And then what they'll do to fill in the gap between their death benefit and their human life value is they'll take a term insurance and a convertible term insurance at that, so that they fill the gap. They've got the death benefit that they need for their family, or that they deserve for their family, and their whole life policy is structured as efficiently and as aggressively as they possibly can get it, within reason. So that's the differences. Now let's talk about how much, or what's an ideal amount. Now again, um, this isn't a required amount going towards the life insurance policy. It's an ideal amount. So a good rule of thumb, a simple rule of thumb, is put a zero behind your age. And that's an ideal amount to put into a whole life insurance policy, not a required amount. So, as an example, I am currently 47 years old. So, an ideal amount for me to put into a whole life insurance policy would be at least 470 per month. Now, my minimum on a policy like that, my minimum might be $100 a month. So that would be the required amount. But if I'm only putting $100 a month into that policy that's structured with an emphasis on the cash value, the equity growth, it's not going to be nearly as efficient as it could be. So if I'm putting 470 into that policy, that means I'm supercharging that policy. That's going to be an efficient tool for what it's supposed to for what it's supposed to do as a personal banking concept. Now, again, we're talking about whole life insurance policy. I'm not taking anything away with the fact that it's a life insurance policy. The purpose of a life insurance policy is to pay a death benefit when you pass away. Okay, that's the purpose of life insurance. And it's such a wonderful, wonderful vehicle. But you have the ability to use these policies in a specific way to build equity, to utilize that equity throughout your lifetime when the need arises. Things like emergencies come up. You might come across a wonderful investment that you can then access that cash value and go take advantage of the opportunity. Again, I'm not taking anything away from the fact that it's a life insurance policy. That's its primary purpose. Anyway, just food for thought. So if you can't effectively fund a life insurance policy that way, then that may not be the best structure. So then you might say, okay, well, what's the best structure for me? And it might be that you don't put such a heavy emphasis on the death benefit, or we might say, hey, I don't have, here again, I'm using myself as an example. I'm 47 years old. If I don't have $470 to go into a policy, how much do I have? Do I have $100? Well, if I have $100 to go into a policy, then I'm likely grossly underinsured anyway. And so it's probably best for me to take that $100 and buy a term policy to maximize the death benefit for the amount of cash flow that I can allocate to it. That's going to be the best use of that money. But if I have $500 of a month that I can allocate to it, then maybe I take 470 or let's say 400. Again, it's not a requirement that I do 470, but maybe I take 400 and put that towards a whole life policy and take the other 100 and put that directly towards term insurance. That way, again, I'm maxing out my death benefit and having that whole life insurance policy structured in a way that I can use it as a personal banking system. So hopefully this helps. Now, again, if you don't have enough cash flow at this point in time to fund that whole life policy properly, get term, protect your family. It's a great product. I sell a lot of it. I own a lot of it. It's a great product. And if you don't get it from me, get it from somebody. Just get it. Protect your family. Protect your most valuable asset. And then when you do have the cash flow to start building that whole life policy, I'd love to hear from you then too. There's going to be some links down below. You can click into Paradigm Life. You can view a lot of content. We've got a lot of wonderful content there, a lot of learning systems, a lot of LMSs, and you can connect with me as well at the appropriate time when you're ready. Thank you for watching. Hopefully this is helpful. Till next time.